Hi everyone, I'm Genevieve TOOP and welcome to a special edition of our market update. Team TOOP were fortunate to have Dr. Andrew Wilson, the Senior Economist for Australian Property Monitors, speak to us today about the Australian residential real estate market. Dr. Wilson shared with us some really interesting and valuable information on how our market is tracking, both nationally as well as here in Adelaide.
One of the things that we have, our home ownership model is about a 70-30 model, right? So it's around about 70% of people own their own home or are owning their own home, and 30% aren't. They're renting or waiting in the queue. So in a way that's been reasonably balanced. It may be falling a little bit at the moment, but the aspiration for home ownership is all about trying to achieve something that's difficult. First-home buyers don't need any incentive to get into the marketplace. So we look over the year, big drop in first-home buyers. Investors up, changeover buyers up, and overall up 4.4%, which is about what your prices grew at. So it's a similar model. So it's a good forward indicator of what's happening in your housing markets, all right? The best thing for first-home buyers is higher interest rates, right? The best thing for first-home buyers, because first-home buyers will go into the market when they can. And higher prices usually attract, believe it or not, lower prices obviously, but higher interest rates attract first-home buyers. But they're very low at the moment, and you can see they're low everywhere. That's a record low for New South Wales, just 7.5%. So investors are crowding out first-home buyers. Investors and changeover buyers, basically around about the same level, but certainly changeover buyers, the most active and very low numbers of first-home buyers in the Adelaide market at the moment.
Dr. Wilson provides regular property commentary to media such as the Sydney Morning Herald and the Melbourne Age, and he specialises in the housing market analysis.
Rising interest rates, falling prices, falling interest rates, rising prices. Okay, clear relationship. It's even clearer when we look at the Adelaide median house price. Can you see how that is activated by rising or falling interest rates? That's how house prices grow. They either grow by changes in interest rates or changes in incomes. And one thing really leads to the other. Because if our incomes are rising too fast, interest rates will rise. If they're rising too slowly, interest rates will fall. So it's a macroeconomic tool that we use to generate economic activity. That's what the Reserve Bank's trying to do now. It has failed. Not its fault. But it also works its way, obviously, into house price growth. We've never had interest rates this low before while we've set them in a market environment. So this is uncharted territory, and we don't want to get trapped as the US and the Eurozone and Japan and the UK have been with zero interest rates. Expansion phase, Sydney's booming, highest growth rate, 15% in a year. Sydney's median house price up by $250,000 over the last 2 years. 205 suburbs in Sydney have a median house price over $1 million. That's 1 in 3. Our data next week will show that Sydney median's now at $920,000, and it'll reach $1 million probably the March quarter next year. The median. We've seen that Sydney median. Of course, the other good point about Adelaide is its affordability advantages. I mean, people don't trade between capital cities when they buy properties. They don't decide between Sydney or Adelaide. But at the end of the day, the difference between what people earn in Adelaide and what people earn in Sydney is not 50%. It's not double. Do you understand that? That means in an inherent sense you have a more affordable market. You get more bang for your buck when you buy property in Adelaide, notwithstanding the lack of the commute that you have to do in Sydney or whatever. Just the actual value proposition is better because of the affordability of this market in general terms, in median terms, and that's important.
It's fantastic to hear that Adelaide is the nation's good news story for real estate.
Okay, 6,000 new jobs in a year created in Adelaide. Good news, right? Better news. We're also now starting to see, and from a high base, the unemployment rate dropping. The unemployment rate in Adelaide from last February is now down to 7.1%. I said this isn't seasonally adjusted, obviously higher unemployment rates in January. But of course the key drivers, as we know, low unemployment, more jobs, rising wages, incomes and profits, lower interest rates, a rising stock market and confidence. But Adelaide's back in town, up again in 2013. Perth another strong year, and Melbourne. And we saw last year, moderating as I said, starting to moderate, but we're now starting to see those underperformers, Adelaide and Brisbane, now leading the pack.
It is looking like great news for Adelaide, and we wanted to share some of these key insights with you. There is still very strong demand from buyers for quality properties. Our auction clearance rates last week were the strongest in the nation, and at TOOP+TOOP, our team are experiencing that this is resulting in properties selling very quickly, and we've also had an increase of properties selling off our vault, which means they're being snapped up by buyers before they even hit the public market. And that wraps up this week's market update.